All right, everybody. Welcome back to Liberator Trading. Today, I'm going to do something a little different besides talking about option strategies and SPX options and what I look at. Kind of wanted to just show you my top-down analysis that I use just for SPX. So we're in Thinkorswim. Hopefully this helps you kind of give a better idea of what's going on big picture, because when trading your options, it's important to understand the bigger picture of which way the market's moving, what's going on internally with the market, what is happening big overall. And I just have a couple oscillators here that I wanted to go through and just show them to you and explain to you what I'm looking at with them. So I've got SPX pulled up, this regular bar chart that I have. Don't use the candles. You can make this. Maybe I'll link the Thinkorswim down in the bottom, but let's dive into it. So we got SPX. It is just your regular SPX chart, 1 year, 1 day. On the bottom, I've got a 10 period moving momentum and a 40 period moving momentum. So I use those, just one's short term, one's longer term. As you can see, here's where the tariff situation changed, and we've ripped back up up to all-time highs. But if you look down here, momentum, what I've noticed, and you can look at this across a bunch of different oscillators, the momentum is actually showing a divergence compared to where the price is going. So that might give us an idea that maybe there's weakness in the market. It's not moving up as quickly as it was. Obviously, it was more volatile. It's not as volatile, pretty steady. But we might be getting something that happened back here in this little spot back at the beginning of the year. So look out for that. On that, just giving you some idea. So I look at that. Then we've got a moving average divergence, different than the moving average, the MACD. This is just a moving average divergence. It's not the MACD, so it's really just showing whether or not when they are diverging or when they've come together. That's pretty much it. So I use a 9 and an 18, and then a 10 and a 50. Just a simple period moving average. Here are the settings, nothing special. So let's put those on the chart here, just so you can see them visually. Change the colors. Got this yellow color. So as you can see, it's just when they cross over, it's just showing that there's distance between the two, and then it's showing what that distance is, that they've diverged. So I use that. It helps me given just an understanding, once again, short-term moving averages, longer-term moving averages when looking at the daily chart. It does help you a lot to understand, okay, we're bullish, both of these are above, bullish there. Okay, and we're moving on. This is just a CCI indicator. Maybe some of you know what it is about, some of you don't, but let's get it pulled up here. CCI. Just type that in. This is the commodity channel index. It's 4 period moving average. Trying to calculate the statistical mean. So basically, there's a divergence between price. So you can use that. Second method is using between negative 100 and 100. So falling out of this range tends to indicate excessive buying or selling pressure. And then the third method that you can use is to just use a zero line, trying to follow along with price action. But the big thing is when it crosses above 100 or below 100, that might be buying or selling pressure, but it's not restricted to that. So let's go back to the charts. So as you can see, we've been pretty much extended over the CCI consistently. And you can see that with the RSI when we get to there as well. But it's just showing that there's buying pressure, that there's a lot of pressure up at the top, that maybe this isn't a sustainable path potentially, just based off of how the price is moving. Once again, this is looking back, not looking forward. So you have to understand that as well. Moving on to the next one, I've got RSI, and then I've got the stochastics here. So as you can see, RSI, it was showing a divergence here, but it actually poked up and went higher. So that could be a good sign that we're continuing in a bullish move. Same with stochastic. That one actually still
has not made a new high. The stochastics, they're also just a measure, an oscillator to show how the price is moving, how quickly it's moving. Um, just like our relative strength, they're all based off similar things, but I just like to look at all of them. So there's that. We definitely are long term in an uptrend, but short term, maybe there is pressure up here at the top. It's along with the RSI. We are above 50, but we are above the oversold. So maybe one of these points there will be an aggressive move back down, a reversion to a mean potentially. But just to keep an eye out on that. And then this is the Williams %R. It's basically an upside down stochastic, is how you can look at it, but it's just another oscillator there to tell you that, hey, maybe we're overbought, maybe we are oversold. So there's some serious pressure that could be up here, up at the top, as we might be able to break. I mean, you can see what happens when we get overextended here for a long period of time. Yeah, there are some quick drop downs, but then we do seem to recover quickly, unless there is some news and uncertainty moving forward in the market. Another one, here's the moving average crossover divergence. So kind of like the moving average divergence, but this is with the crossovers, and seeing them come closer together. This is using the 12 and the 26, then the 9 period. As you can see here, this has just been up above the 0 line. We have had the crossovers, which is bullish sign. We've had crossovers going down, which is a bearish signal, as you can tell, but we have been overextended above the 0 line for a long period of time. And we don't really have much divergence between the two moving averages. They're pretty close together, actually. So that could be a good sign that maybe we're continuing in the uptrend, but we are definitely in an uptrend at the moment. As you can see, we've got lower lows, higher highs, lower low, higher high, lower low, higher high, lower low. This is a new higher high. So the uptrend has been reestablished in the S&P 500. So I would, moving forward, you can think to yourself that we will continue to move up in a momentum, man, upward with momentum. There's nothing there to tell you otherwise. Once again, here's just oscillators. I look at them weekly. At the end of the week, I don't look at them daily, just to get an understanding of what's going on. So this is going through them all. But I just did notice this week that we did have some divergences here continuing to form. Maybe this breaks the long term, breaks the trend line, then we move up. That would break that divergence. But you never know. So that's SPX. I'll share this link so you have this in the bottom so you can look at it. It'll get the setups and all the settings and everything that I've got set up. Really important to understand what the big picture is long term. Maybe I'll do this weekly. We'll just look through everything and we can analyze it together. Thanks for checking in and tuning in. Hope you have a good rest of your week.